So the markets are digesting it, but they're not moving too much on this morning's news. Why do you think that is? Is it all priced in already, or what's going on?
Well, I think, the key thing remains trade, and I think they're somewhat skeptical. We had a Wall Street Journal headline that both parties had agreed not necessarily to act on December 15th, that it's not a deadline. That allowed the futures to reverse over 100 points in the Dow. And then the skepticism began to set in. This market has had its heart broken time and time again. We've been told a deal is imminent, this is about to happen, and our mutual friend Larry Kudlow is straining his credibility. He's brought us right up to the edge several times. So this market is somewhat skeptical of where we're going. I think the trade deal with Mexico and Canada could be helpful, but the market is still very much focused on the big U.S.-China deal and see where we go from there.
Do you think that the market needs to see an actual deal, or is it right now would it be satisfied with a simple delay in the tariffs, though? I mean, if you're able to kind of kick that can down the road to 2020, would that relieve any kind of overhang that has been over stocks from an uncertainty standpoint?
Well, I think it gives the market some sense of hope that, they haven't slammed the door and walked away. But I'm not sure that just postponing the tariffs is and of itself enough. I think the idea that they're still negotiating, they're still talking, that is giving the market a little bit of a boost. This market would very much like to see a deal. I think if you got a deal, you'd get an explosive, certainly 1 or 2 day rally out of it. And, we're up at highs. We could have a breakout rally here. It could begin to feed on itself. But they have been heartbroken too many times. So they are very skeptical. And, where's the beef? They want to see where they get an answer here.
How do we get that breakout rally you spoke about?
Well, again, give them something absolutely constructive. I am impressed that the first hint of cooperation between the administration and Congress are showing up. If they're going to approve aspects of the budget, that it appears, initially they didn't want to touch it unless they got him to disavow that any of it would be used for the wall. That seems to be disappearing. So that's good. I don't think cooperation in Washington is enough. I think it's still got to be China, and we'll see where we go from there.
Report today about S&P having its best year in 6 years, and yet flows from U.S. retail investors have been negative. Some argue that means there's plenty of people left to be a marginal buyer. This rally could go on for a couple of years. You buy that?
Yes. I mean, we've gone through this time and time again. This has been one of the most hated rallies, one of the most powerful, but also one of the most hated rallies we've seen. I am told that one of the top-selling books in Germany is about the imminent crash of the financial markets. So, that skepticism is out there, and you go back to Buffett. You want to be fearful when people are greedy, and greedy when people are the other way. So.
Yeah, hedging futures have also picked up kind of toward the end of the year. Do you make anything of that?
Well, the thing that I've noticed is hedge funds, which had been pretty much away from equities, are starting to move in. Now, I don't know if that's going to be a contrary indicator, but I'll buy the fact that if the public is avoiding stocks and maybe hedge funds are in, then it's not that big a negative. So they're holding together. The sell-off we had yesterday and a little bit of the weakness today might be seasonal. The market has a tendency in mid-December to have a bit of a pullback, and then they get a sighting of Santa Claus and we head for the year-end rally. So let's hope it follows that pattern again.